Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, there's a lot to process. We had the Gujarat election exit polls coming out last evening. Also, a surprising crash on Wall Street as well. So, we will get through all of that. But first of all, let's put the Gujarat election exit polls in the spotlight and what it could mean for the equity markets. Now, if you look at the exit polls, clearly they have come in line with what the expectation was. At this point of time, majority of the exit polls are indicating that the BJP government, that is the incumbent government in Gujarat, will form another new government there. There will be another term for the BJP party in Gujarat as far as the exit polls are concerned. Now today's Chanakya, which is the the exit poll that is very widely tracked by market participants, at least on the Lal Street, that is indicating almost a 150 seats win for BJP, plus minus a few percentage points here and there, clearly providing a sort of a safety net for the market, because of course any ugly surprises here would have had implications for the sentiment on the market. What this does will probably the victory, the potential victory for BJP will at least provide that sense of stability or political stability that India has been enjoying over the past few years. Clearly, investors hate any sort of instability and uncertainty, and this should, in the run-up to the general elections in 2024, quell any such fears in the market. Also, now with the exit polls out of the way, and clearly we will have the counting, the actual formal counting happening on Thursday. If the actual counting goes in line with what the exit polls are suggesting, clearly the market will then move on from the Gujarat elections, and the earnings, the focus will shift towards earnings, which are, we have the third quarter earnings due from next month, and also the next federal policy meeting later this month. Now, one thing that may play a spoil sport, and it looks like it will do so today, will be the US Federal Reserve. Now, yesterday, if you look at, the economic data that has been coming out in the US the past 1 week, we had a very strong jobs report. We had a very, strong unemployment claims report. And yesterday we had a very strong ISM, non-manufacturing or services PMI report in the US. Now, all of that combined has suddenly made investors realize that the pivot that they have been waiting for, that is basically the point where the US Federal Reserve will start thinking that maybe it need not raise interest rates anymore to tackle inflation, and maybe it is time for a pause on that front. That may not come as soon as the market is expecting. Currently, traders worldwide have been betting that the Fed will pause rate hikes come March. But at this point of time, with such a strong jobs market, labor market in the US, it seems that even though the quantum of the rate hikes may come down to about 50 basis points, the amount or the the period of time for which the US Federal Reserve may raise rates, that may get higher and longer and longer. And that is where we have seen the correction that we have seen in Wall Street overnight, and possibly today morning in India as well. Now, if you look at the trade setup for today, if we make the segue to the trade setup for today, you can see these fears actually at this point of time offsetting the positives that are coming out of the exit polls in the Gujarat election. The exchange futures are indicating a very weak start to Indian markets, almost a 50 to 70 points cut on the Nifty 50, probably also due to the sort of a muted reaction we have seen in Asian markets as well, where Chinese equities are still holding strong after the initial correction that we had seen about, when they had opened for trading earlier this morning. But clearly Japan and others are at this point of time in a weak momentum. If you look at Wall Street, of course, as I mentioned, we did see a sharp sell-off in Nasdaq, in S&P 500, as well as Dow Jones yesterday on the back of a very strong services PMI data. Also, US 10-year bond yields surged very rapidly, as well as the US dollar index, which now sitting above its 200-day moving average, clearly indicating that maybe the dollar index is not yet done with another rally potentially going ahead, because it's looking like it's taking support at its 200-day moving average. So overall, that is the setup for trade. Now let's quickly take a look at the FNOQs for the day. And if you look at in terms of long positions, some of the stocks that had seen long positions yesterday, they were M&M Financial, Hindalco, Piramal Enterprises. Now M&M Financial, of course, it's understandable given the very strong loans growth data they had registered in November. clearly a lot of investors now turning very bullish on that counter. There was some bit of long unwinding also happening. Stocks where traders were unwinding or squaring off their long positions, and these stocks were BHEL as well as Persistent Systems. Now, Persistent Systems, let's not forget that JP Morgan came out with a downgraded report on that stock yesterday. Also, some bit of short covering happening in the out of money put options of the Nifty from traders, which clearly is not a good sign, because generally that means that people who had written those put options, they are now covering those positions and maybe indicating that the market could be heading lower instead of heading higher. We are seeing a massive resistance around at 18,900, 19,000 mark for the Nifty. A lot of call writing happening on those levels at this point of time. So very interesting to see how this market closes out this week, because we have the RBI policy outcome coming tomorrow, and then day after we have the Gujarat election outcome coming out. So very interesting setup, very important week for the market as we head towards the end of the year. Moving on to the newsmakers of the day, and the first one, of course, is Rainbow Childcare. Now, a massive block deal happening on the counter yesterday. UK British investment sold a large chunk, almost the entirety of their stake in the company, which was almost 14 to 15%. Now, a lot of marquee investors, of course, have come into this counter, and therefore it is very likely that a stock could see a decent amount of bounce back. Today morning, Government of Singapore, Abu Dhabi Investment Authority, many big names, of course, sovereign wealth funds who have now checked into Rainbow Childcare. So clearly, this is going to be one stock that will be buzzing in trade. The other stock, in my opinion, that could be potentially a buzzer this morning could be Delta Corp. Now, yesterday, CNBC had done an interview with the management of the company, and they have ended up giving a very strong guidance for the third quarter. They said that at this point of time, most of their casinos in Goa are going sold out, clearly indicating that the revenge travel theme that has kick-started earlier this year is still continuing, at least as far as Goa is concerned and casino players like Delta Corp is concerned. So that is clearly a good indicator for Delta Corp's earnings. Also, the company said that the online skill gaming as well as the hospitality side of the business is also doing quite well and may see a turnaround in the second half of FY23. So good cues, good comments coming out from Delta Corp, and you could see potentially the stock seeing good amount of traction in trade today. Moving on to the top brokerage bets, and I have two of them today, one from HDFC Securities and the other one from Morgan Stanley. Now, HDFC Securities has come out with an initiation report on Surya Roshni. Now, this is a stock that has seen a lot of selling pressure earlier this year. There was a lot of profit booking that was happening on this counter, but HDFC Securities now believes that it's the right time to probably buy into the stock with a target price of 532 rupees. Now, the stock is a strong play on the pipes as well as the lighting industry in India. Now, while the lighting business has not been doing that great because, of course, it's a low margin business which has seen slower growth recently, the pipes business is where all the attention is going right now. Remember, not so long ago on this show only, we had talked about stocks like Prince Pipes, and ICICI Securities coming out with a note last week suggesting that the pipes industry could be in for a very strong revival and volume growth because of the strong pickup in housing construction that we are seeing in the economy. So because of that, at this point of time, HDFC Securities is clearly very bullish on the pipe segment of the company doing quite well, while it's also seeing decent amount of traction as far as the lighting business is concerned. Within the pipes sector, while Prince Pipes caters to the housing space, for Surya Roshni, the opportunity might come out in the city gas distribution as well as the oil and gas industry. So that is where HDFC Securities is bullish at this point of time. They have suggested or advised investors to buy the stock at around 462 to 471 level for the next 2 quarters, of course, with the target price, as I said earlier, of 532 rupees. So that is the base case for HDFC Securities as far as Surya Roshni is concerned. The next brokerage report is from Morgan Stanley. Now, Morgan Stanley had recently, of course, come out with a very bullish report on the entire banking sector, where they were in particular quite upbeat about the state-owned banks, of course. Now, they have come out with a update to that report wherein they have raised their price target for Bank of Baroda. Now, this is a stock where the brokerage firm has an overweight rating and a price target has now been raised to 220 rupees from about 170 odd levels earlier. Now, Morgan Stanley is saying that it sees cyclical tailwinds in the sector, enabling or aiding the current re-rating process that a lot of PSU banks, including Bank of Baroda, are going through. Also, the brokers of the view that the loan growth rate that a lot of these banks are posting, which is in excess of say 12 to 15%, that is likely to continue. And also, along with credit costs remaining benign going ahead, it is a very strong setup as far as the PSU banks are concerned. So a very bullish call coming out from Morgan Stanley. It seems like at this point of time, they're doubling down on their optimism for PSU banks at this juncture. Moving on to the stock takes of the day, and 3 stocks on my radar this morning. The first one, of course, is another one from the banking space, and this is HDFC Bank. We all know it's been a rank underperformer within the banking pack also, and to the market as well over the past 1 year, largely mostly from April onwards, since that merger with HDFC was announced back in April. Now UBS India has come out with a very positive view on the stock, and they have in fact raised their price target on the counter by about 9% to 1900 rupees. Now recently I had also turned bullish on this counter. I had suggested that there clearly seems to be a case for a value bargain becoming very visible in HDFC Bank, given the underperformance of the stock as well as the strong earnings that the company had posted in the September quarter. Remember, their loan growth in the September quarter was in excess of 20%, clearly beating the entire industry and many of the other banks, such as say ICICI Bank, which had a lead, or HDFC Bank. Now, according to UBS, the bank is likely to have a more sustainable net interest margin in FY24 because it at this point of time is enjoying a better credit cost scenario than many of its peers. And also, they believe that the lower credit cost that HDFC Bank enjoys is likely to cushion or provide a cushion to earnings in FY24 and FY25. Remember, for banks, the bigger issue at this point of time is actually not loan growth, it is actually attracting deposits, because at this point of time, lenders which are not able to attract cheap deposits are having to tap into the credit market where borrowing costs are actually inching higher. So therefore, there are question marks whether they can sustain the current net interest margins that they have been enjoying over the past few quarters. So clearly, UBS is of the view that HDFC Bank is going to come out stronger in this scenario than any other lender at this point of time in the sector. The second stock on my radar today is Bharti Airtel. Now, a very interesting note coming out from Goldman Sachs. They recently met the management of the company, wherein, according to them, they got an indication that the company is likely to go ahead with a tariff hike if the industry decides to do so, despite the claims that the current inflation pressures might detract a lot of these companies from doing that. Also, the stock has seen a lot of downgrades in the month of November, despite performing so well over the past 1 year. And at this point of time, UBS's view is that the company's focus on market share as well as high quality investors is going to be quite good for the company's ARPU going ahead. And with that, let's quickly take a check on the market. We had the opening bell ringing and it has been a negative start as indicated. The Sensex and Nifty down about 0.4 to 0.5%. The Nifty mid cap and small cap also outperforming at this point of time, relatively better, but still seeing a downtick, down about 0.2% on Nifty mid cap after hitting a record high yesterday, and Nifty small cap 100 index about flat. You can see the Nifty Bank, Nifty IT contributing the most to losses. Nifty IT, of course, down about 1% after a sell-off we had seen in tech stocks yesterday evening. So clearly, IT stocks will be will see a lot of pain this morning. But Nifty Metal Index also seeing a little bit of correction after a sharp rise yesterday because of the entire China reopening theme that we have seen, and Nifty Auto Index not doing that great. If you look at advances and declines, they are still quite positive and in the favor of the bulls. About 1,000 stocks higher on the NSE as against about 750 stocks down on the exchange. So clearly, it's been a weak start, but we'll have to wait it out. We'll have to wait and see whether we see some bit of recovery, because so far we have seen that the trend in the market has been, or the setup or the structure of the market has been buy on dips, and whether this sort of a dip in the market could attract investors who have been sitting on the sidelines for the past few weeks and months. Moving on, coming back to our stock takes, the last stock on my radar today would be Trent. Now, a very interesting report coming out from MC Pro on that stock earlier this morning. Now, Trent's second quarter earnings, if you look at the second quarter earnings, that was a little bit of a disappointment because overall, while the sales growth were quite strong, the EBITDA margins of the company had taken a beating because of high raw material costs. And while the stock was flying quite high over, prior to the second quarter results, since those results have come out, it has not done that great as compared to where the market has been. But going ahead, if you look at what are the triggers for Trent, clearly the aggressive store expansion that the company is doing, that is clearly is going to be an enabler for growth going ahead. At this point of time, management is of the view that increased penetration will drive growth ahead for them. Also, let's not forget that the company has a very loyal customer base as well as a very strong balance sheet. Their debt position is very, very comfortable. They have good amount of cash on the books, and both of these factors will enable them to aggressively expand their store network without it becoming a burden on the company's earnings as well as margins. Also, very interestingly, MC Pro pointed out that the new app, the super app that Tata Group has launched, known as Tata New, that could also be a very interesting way for Trent to acquire new customers, especially for its online venture. Now, Westlife.com has seen a very stellar growth in the second quarter on a year-on-year basis, in excess of 30% growth there happening as far as Trent is concerned. So clearly, it is trying to play both the the retail or the physical play as well as the online play, and trying to become a great omni-channel prospect as far as the branded apparel segment is concerned. And therefore, MC Pro is of the opinion that the stock could see another 20% upside from current levels going ahead. So clearly a very bullish call coming out from the analysts at Moneycontrol Pro. You can of course subscribe to Moneycontrol Pro to get more such insights and analysis from our analysts. On that note, I'll wrap it up for today. Please continue to post your comments, thoughts, analysis, and of course criticism in the comment section below. Also keep following us on the social media links that you can see at the bottom of your screen at this point of time. And of course, for any financial and every political news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great day.